Hey everybody, it's Pete. Welcome to a new episode of Stocks for Breakfast. And today we're going to discuss the quickest and easiest way to put yourself in position to have much bigger winning trades. But just as importantly, in today's choppy market, where I'm speaking about this right now, which is September, the end of September 2020, there's a very poor environment in a lot of stocks that were super obvious in the summertime and specifically July and August. And many traders that are giving me feedback, posting comments, emailing me, and especially people that are in the boot camp right now, are over trading a little bit or not recognizing the conditions have changed. So we're going to walk through a little PowerPoint presentation here. That's right, we're getting fancy today. And we're going to discuss how to use multiple time frame analysis properly so that it puts you in the best position to win and win big. But more importantly, it also helps you eliminate and reduce all of those poor ideas that are just bad trades that you try and justify because the stock was good a month ago. So we're going to get right into it. We're going to go right into the presentation. What I do want to ask you to do, though, is tonight I'm actually hosting a live training of the New York method, which is all of what we're talking about right now. And I'd like to ask you to attend. If you can click down into the description and register for tonight's event. It starts 7 p.m. Eastern time, and I'd love to see you there. It'd be well worth your time. It'd be a good investment of about 45 minutes. So anyway, we're going to click over to the screen, and we're going to start out with a topic that's known as multiple time frame analysis. Now, a lot of people probably know about multiple time frame analysis, but one of the biggest things that we're really focused on is separating you from being a chart reader to being a trader. And there's a big difference. Chart readers often understand what they're looking at, but they don't understand how what they're looking at translates into making money or saving money. And that's what we're going to talk about today. So a common obstacle that we've seen, that I've actually experienced myself, is when you're sitting in front of a screen, especially if you're a day trader, which, by the way, what we're about to cover can be used by both day traders and swing traders, is too much focus on where you're entering. So in other words, the main thing you're looking at is this a spot to buy versus is this an opportunity to make money? Remember, we want to go from chart reader to somebody who actually can be called a trader who takes money out of the market on a regular basis, consistent basis, not once in a while. So MTFA, you'll see me talk about this throughout this presentation, is multiple time frame analysis. And here's the big thing. You want to be focused on the big money, the money that moves a stock from 50 to 100, from 100 to 75, whether it's accumulation or distribution. So remember, our job is, number one, is to assess probabilities. And that's really what we're going to do right now with multiple time frame analysis. We're going to discuss the probability of making money. Very big difference from what I see, a very big mistake that far too many traders, I know it's a lot of exaggerating there, but far too many traders make, is they focus on the entry and not focus on whether or not the odds of making money are strong. So we're gonna fix that right now. Our job also is to determine if the risk is acceptable in exchange for the potential profit. So you actually see here, right in the first two bullet points, just like that, we're talking about probabilities and risk, and whether or not that risk is something we should accept because the odds of making money are good. Think about that. I don't even talk anything about whether or not it's a good spot to get in. It doesn't matter if it's a bad idea. So we're gonna continue and let you understand what that means. So the next step is, if we like the first two pieces, we assign capital and leverage to each idea based on our assessment and money management parameters. Now, here's a monster thing that I'm going to talk about in tonight's presentation in a lot more detail. Something that we go over in the boot camp day after day after day, trade after trade after trade. Is how to assign capital and leverage, how to work orders within the context of trading ideas. Some ideas are great and you could work those orders. Some ideas are okay and you really need to manage those trades differently. So we're going to cover that in a bit as well. And then the last part, apply trade management skills. And believe it or not, trade management is a skill. You need the skill of understanding what I call B, between entry and exit. You need to manage what happens after you put the trade on to profitably manage a winning trade and to manage trades that don't work out just as properly. And last but not least, multiple time frame analysis shows us how to determine probabilities and reward potential. So that's a big deal. We're not talking about stop losses here. That's a little bit of a different piece of the puzzle. But we want to get across here. It's our job to determine what are the probabilities of making money and what is the reward potential. So again, this is actually two different pieces. Probabilities of moving in your favor. So the odds of a trend continuing, and how much can I possibly make if that happens? And is that worth taking the trade based on what I could earn versus what I have to risk? Now, this is interesting. We actually recently had a trade in Workhorse, WKHS, where we had just this amazing, 2 days later for some members that weren't in the community or didn't catch the game plan videos, looked to enter that trade after 50% of the profit potential was already in the trade, actually closer to 60%, and wanted to know if the trade was still valid. And the answer was no. The idea was still valid, but the trade wasn't. That's where a lot of traders get caught. All right, so how to increase your odds with multiple time frames? Make only trades when you have confirmation of the idea in all relevant timeframes. Now, relevant is highlighted here because relevant is relevant to whether you're a day trader, a swing trader, a position trader, a scalper. You need to know what kind of business you want to run, what kind of trading business you want to run before you start, and that'll tell you which road to look at, which map of multiple timeframes to look at. Next, trade only in the direction of the monthly order flow, weekly order flow, gives you a clear picture of the overall market direction. Now, here's the key, and this is just a bombshell of I'm not going to say knowledge, but cold water on the face, where we all make this mistake. So we all have made this mistake, where you see a stock going up, you see stock going up, you see stock going up, and it's clearly in what we call bullish order flow, clearly a stock that you should be buying, but it pulls back for a couple of days. You've been watching your stock using monthly order flow and weekly order flow, and all of a sudden the stock's pulling back for a day or two, and you're like, oh my gosh, I need to sell this stock short because right now it's going down. The answer to that is no. You do not do that. That is a low probability scenario. So right out of the gate, we're setting the mandate that you know which time frames are the ones that you are trading, and then only trade in that direction. Don't even look at the other side of the market. You should be literally sitting there with blinders on saying, this stock is in bullish order flow. I am only looking for spots where risk reward makes sense. So once you get a clear picture of significant support and resistance levels for the proper stop loss and profit targets in the direction of whichever time frame. Now, we're talking about monthly and weekly. You might be a super active day trader. You might be using the hourly chart and the 15-minute chart, which I know that sounds crazy for a lot of people that are looking to get in on January and get out in June, but that's actually a style of trading. But the point is you need to be 100% clear about which order flow you're trading, all right? Then you narrow down the daily and intraday charts to time your entries and exits and determine if momentum is overbought or oversold. Now, I very rarely use the terminology overbought and oversold, but this last bullet point is actually what we call tape reading, because I'm just going to come back to the screen very quickly here. There's order flow, which is the big picture, and then there's the movement within the order flow. So having an opportunity to buy and having the opportunity to buy now is not the same thing. And that's where a lot of swing traders especially see a good opportunity. It goes up one day, it goes up 2 days, it goes up 3 days. You're like, oh, now I got to get in. Wrong, you're late. And that's where tape reading is kind of that final piece to the puzzle where you say, okay, the odds of follow through are good. I can define where I could possibly get out of that trade, but for how much I need to risk and what's available in the trade, is it worth it? You end up looking at trades where when you learn to read the tape, you're like, I have to risk $3 to make $4. That's not really a good idea. I have to risk $3 to make $3. That's absolutely not a good idea. That's a one-to-one trade, and that makes you a break-even trader. And that's not what we want to do. We want to get to the point we're putting on trades that make sense. If we accept risk, there's sufficient profit potential to bring us back those rewards, and the likelihood of that happening is very good. And that's what we specialize in. That's really what we're best at. It's first about assessing the idea. You don't even look for the entry until you have a great idea. A good entry or a clean entry or a bear flag or a bull flag or whatever trade entry you're looking at, if it's not in the direction of good, clear order flow with profit potential that's likely, the entry doesn't matter. And that's two areas where really smart traders get screwed up, where they're chasing price, they're too late to the party, or they're finding perfect entries in the context of weak or less obvious order flow. So that's where trading becomes fun. That's where trading becomes easy, when you identify order flow first, and you'll determine, is there a trade idea or is there not a trade idea? And then you basically just sit back and like, okay, I'll look for entries because the order flow is great, or it's crappy, which a lot of stocks are right now. And you're like, I'm not doing anything until this picture clears up. And that's what you need to see on the charts. So hopefully you understand now there's a difference between trading and just looking at the charts. You can have moving averages, you can have stochastics, you can have all of the stuff that many traders and many software platforms have available. And look, I'm not saying not to go down that rabbit hole. I did, but really, when push comes to shove, when it comes to making money, not making money, price is what moves all of those other indicators. And if you actually learn the simplicity of reading order flow, the simplicity of understanding how to be a tape reader, you make that leap from chart reader to tape reader. And then when you learn what happens between entry and exit, and you learn how to get out of trades properly, that's when you can start calling yourself a trader. So what we just touched on here, multiple time frame analysis, is determining which time frame matters to you, which picture of order flow matters to you. That's where trading becomes easier, because now you're not looking at everything, you're looking at something. And that's where it becomes magical, because now you're like, I don't care about anything else. That's when, think about it. Like, I don't care about anything else except for that picture. And if it's obvious, I'm going to look for spots for risk reward, which means entries, stop losses, and profit targets. And if it's not obvious, which is in a lot of stocks right now, and if you're still trading in a stock that's not obvious, you're probably very frustrated right now. You're probably, I don't understand what's going on. I don't understand why I'm losing money. I don't understand why I'm getting stopped out. That's because you don't have a clear picture of what order flow looks like, and you don't understand how to read the tape yet. They're very easy to do, but you need a structure. You need a window. You need an opportunity to say, I know what I'm looking for. I'd love for you to come to tonight's presentation if you're not in the boot camp already, because this is really what I'm going to discuss tonight. I'm going to show you exactly how to set this up, and it'll be worth your time. Have a great day, everybody.